This is the single most self-destructive trading error that one can make in their career. You're going to have to continue working your job just to fund your trading account. That's not a profitable trading system. We should be making money from the industry, not losing our money. Hey everybody, and welcome to another video. I don't want to waste too much time, so let's dive straight into it. In order to be successful, you need to put in the work for many, many years. In fact, a lot of highly intelligent individuals with high IQs, they make part of a huge chunk of the 90% of people that actually fail in trading. So what you want to do is find a strategy that works for you personally, that addresses all elements of technical analysis: entry points, exit points, managing the trade, and having the right risk to reward ratio, as well as risk management principles. You need to decipher what kind of trader you actually are. Are you a swing trader? Are you an intraday trader? Are you a scalper? This is something that takes time. This isn't something that you're going to learn straight away. Well, I'll give you a story when I first started trading. I thought I wanted to be a scalper. I was adamant that I wanted to stay glued to my trading chart. I wanted to be in and out of trades within minutes. I wanted to be extremely active. But obviously after a year of finding out this did not suit me at all, and after many losses, and realized scalping was not for me. It didn't suit my personality. And this is the cool thing about trading. There really is so many ways to be successful. It all depends on the person and their personality. For example, if you're a highly anxious person or a fearful person, it wouldn't make sense for you to follow a scalping strategy. You may be suited more for something like swing trading, even intraday trading. Once you do find a form or a style of trading that suits you, you want to stick to it. Don't be switching in and out of scalping, swing trading, intraday trading. It's only going to cause you frustration and confusion. Once you find something that you're profitable with, you need to stick to it. Another huge reason why so many give up or fail so quickly, they don't give themselves enough time to collect the data to find if they actually do have a winning strategy. And this could take 2 years minimum. You need to give yourself a sufficient amount of time to be able to collect enough data to find out what sort of trader you actually are. You're not going to find this out in 6 months, and you won't find this out in 12 months. Sometimes it can take up to 2 years, depending on the individual. People give up way too quickly, and usually when they do give up, it's just before that breakthrough moment, which will provide them success. Finally, you also need to be comfortable in accepting that there will be losses. No matter how successful a trader is, the traders that we see online, they are going to experience losses. What separates them, they're not holding onto trades and hoping that it turns around without a stop loss. That's a surefire way of an account blown. And as soon as you have a blown account, you don't have a trading account to actually profit from. You won't be making money. That's your vehicle gone. If you don't have a car to get from A to B, you're not going to get anywhere. Think of it as a business owner opening a restaurant. They need to purchase the products, they need to pay the staff, they need to buy materials. They don't actually make a profit until the food is made and then they sell it to the customer. That's when they finally make the profit. So in the beginning, they're actually out of pocket. That's a business. That's how we should be treating trading. We need to approach trading as a business, not a casino, which most do. And folks wonder why the success rate is so low. Instant gratification can be extremely damaging. In any career, you can't expect quick results with no work and no time. We know trading is a probabilities game. So if it truly is a probabilities game, why do so many traders increase their risk after they experience a period of winning trades? And then they decrease their risk after a large amount of losses. Now, you have to remember, if you've just won 5 trades in a row, do you really think the next 5 trades, 3 trades are going to be winners? The probability rate significantly decreases. So when I have a winning period, I actually decrease my risk to half of what I usually risk. And vice versa. If I have a period of losses, I will have a day off, not too long. I will enter the market again and I'll keep the risk exactly the same. If I've had 3 losses in a row, the probabilities of me winning the next trades significantly increase. This is where emotions can be very interesting, because our automatic human reactions is to run away, flight mode, when we experience these losses. And the opposite, when we have a winning week, we're pumped. Our entire vibrations is raised. We want to enter the market straight away and risk double. And of course, then the trades lose. It takes 2 losses to completely clear off an entire account. It is important to remember as well, when you do have or when you experience some losses, don't take too much time off. The market is forever changing. Conditions change really regularly. How the market moves this year in 2023 moved completely differently in November of last year and all of last year. And if you're having a period where you have 2 months off because you're afraid of losing more trades, it's almost like you have to relearn the market conditions. Well, you do. So then that's more time that you have to adjust to how price is moving. And then you're left confused, wondering if you have to learn another strategy. More times than one, it ain't the strategy is the reason because you're failing. It's your mindset. And this explains the quote, "Successful trading is 90% psychology and only 10% technicals." Now, if you're a trader and you've been trading for quite some time, I'm sure you're pretty well aware of this quote and you understand it really well. So then why do so many traders keep seeking new strategies month after month when they're failing? It's information overload. Every time they sit down at their computer, they go to enter a trade, they have so much technical knowledge that they're left completely confused because one strategy told them that they should enter a trade because of this certain pattern, but another one has completely contradicted that same strategy. So they're left wondering, what do I do? It's not technicals, it's all your psychology. Trading technicals really is simple and it doesn't take a long time to grasp. It is also extremely important when you do experience some losses, you don't jump straight back in and revenge trade. You have to really be self-aware and know if you really are clear-minded. It doesn't hurt sometimes to take 1 or 2 days off. That's totally fine. But if you're treating trading like a business and you're detaching your emotions, you shouldn't need more than a week off. It would make more sense for a trader to actually invest in a psychologist to help them overcome their traumas. I think they would see a lot more success in the markets rather than paying for a new mentor and learning a new strategy. People spend thousands of dollars on education, yet they don't spend any money on their mental. You can find a psychologist that may be $100. A normal mentorship program or learning technical analysis may cost you up to $2,000 when it simply is your mind that's stopping you. Rather than seek out another mentor and learn yet another strategy, find a psychologist. Learn about your traumas. See what can be done, how they can help you overcome those traumas. You're going to see a lot more success in your trading results. I can guarantee it. In terms of long-term consistency, you need a strategy where you can rely on. If you're treating trading like a casino, a slot machine, and you're throwing in a few $100s here and there, continuing to blow it, over leveraging, risking 60% on one trade, maybe 3 out of 10 times it may work. But is that sustainable? Is that something you can follow over a 3, 4, 5-year period and consistently see your account grow? I've done all the mistakes that I'm talking about. And this is exactly why I've chosen to create my own course and mentorship, because I want to fast track the mistakes that I made to other people and help them not make the same mistakes. I didn't have a mentor that helped coach me with my psychology. I learned everything the hard way. And it's all ego. It's all ego. We have to completely disregard our ego. The market is always right. There's nobody else to blame but yourself when you're experiencing hard time in this industry. And this is really tough too. When you're working for somebody else and you have work colleagues, it's very easy to shift the blame onto somebody else. But when it's just you and the market, there is nobody to blame. And you can't blame the market. Think back to a time where you did incur some losses. What was your automatic reaction? Were you wanting to look to make that loss back straight away and profit on top of that? No doubt you're likely to be risking a lot more than 1 or 2% per trade. You enter the trade, no stop loss, goes in your favor, you get extremely excited, your heart rate starts to rush, starts coming back around. You're in drawdown. You move your stop loss. You have a mental stop loss, right? You have a mental stop loss. I mean, I've been there. I know what a mental stop loss is. Okay, so the mental stop loss doesn't work. Say it gets to your mental zone. Are you going to close a trade being in 30% drawdown? Highly unlikely. You'll be waiting for it to turn around so you can close it with a little bit less of a loss, but it doesn't turn around. It keeps going. You're wondering, surely it will turn around. It can't just keep going. It can keep dropping. There's a zone here. It has to retrace. Does that sound familiar? Yeah. Half the time it doesn't turn around, and when it does, and it gets there, there's no way in hell you're closing that trade. You may see the loss decrease. Maybe you can decrease it a little bit more. Maybe it can turn into a profit. Drops in the opposite direction, you've stopped out, your account is blown. We've all been there. I've been there many times. Cognitive dissonance is a mental conflict that occurs when your beliefs do not line up with your actions. Therefore, you're more likely to have to find another trading opportunity. You have to make back that loss, causing you to randomly enter and exit trades in no strategic approach whatsoever. This is the single most self-destructive trading error that one can make in their career. What's going to happen when you keep reloading account after account after account? You're going to get to a point where you just don't have much money left. You're going to have to continue working your job just to fund your trading account. That's not a profitable trading system. We should be making money from the industry, not losing our money. Trading can take hold of our entire lives if we're not careful and if we don't approach it the right way. It can completely destroy your character. This is why it is so important to get the right advice. Yes, it can be extremely dangerous if you don't have the right information. So it really is important to let go of expectations, have patience, and have discipline. You're better off investing in a psychologist, talking to them, getting to know your traumas, your reactive points, why you respond in certain ways, how you can overcome these things. There's a lot that trading teaches us about ourselves. Trading will literally pull out all the trauma from your soul, and you have to be open-minded to take on that information and work on it, because that's what's going to give you the ultimate success. You need to more work on yourself than studying the charts. I hope this video has helped. Please feel free to have a look at my channel. I have created a variety of trading videos. If you do want to reach out to me, my details are in the description below. Don't forget to subscribe and stay tuned for the next video because it's coming up soon.